Welcome everybody, and the first thing I'm going to do is I'm going to bore you with this slide of data. And I love this slide. Don't pop out your no-dos. Actually, hopefully in this next few minutes, you guys will all be commercial experts on vacancy. So this is a vacancy factor. Maybe we can turn off the lights. I think it's more important to see the slide than to see me. Anyway, a vacancy factor is if we take up all the square footage, we add up the Costco's and the Home Depots and all the stuff downtown, and we say, this is how much building inventory we have, and then you subtract out the part that's actually available to lease, the vacancy, we get a vacancy factor. And this is, as a rule of thumb, as you see all these statistics, we'll see a vacancy factor where we use about 5% as a norm. It's like a parking lot. There's got to be spaces available in there so that when you pull in, you can park. So if the market is above 5%, it's kind of a soft market. If it's below 5%, it's kind of tight. So as Steve Davis and I are guest authors for the forecast, and I kind of did a stoplight thing of red, yellow, green. The colors aren't coming out very well there. But to this end, we've got probably 17 years of data on here. And so this is what lenders and appraisers look at to look at the health of a community and to determine, hey, this is a little soft market. Maybe our interest rates are a little higher, or there's a little more risky loan or not. But we're starting back in 2002, so I'm going to talk about the past, the present, and the future. In 2002, this is when we didn't have the traffic going north and south like we do now. And that was when the tech bubble happened. So that you can see our functioning office inventory jumped up to 9%. So if we had that rule of thumb, that's almost double what happened here. Now, up in Paso Robles and Santa Maria, those numbers probably were 17, 18, 20% on things. So that's when the tech bubble burst. And then I skipped a few years to save you guys some stuff. And we got into all the run-up where the housing prices got so high in 2006. And then look at this period known as the Great Recession, that long stretch in there. Look at our vacancy factors. And this is, so they've gone, you can see them climb, 6, 5, 9, 12.2, and then they start to drop a little bit again. So that's telling that the market's filling up. You can see that we're focusing in on office right now because that's the exciting part of San Luis is we've got this kind of tech healthcare thing going on, which is we'll get to the present. Anyway, as this vacancy drops down, Santa Maria's housing market has not recovered to where it was prior to the start of the recession. Paso Robles, the median is just about there. San Luis just tipped the scale a little bit ago, even though we've got, can you believe it or not, hey, come in and buy your $1 million home. It's still barely recovered. That was a deep, deep recession, and we can see it in our office vacancy factors. Now that you know what a vacancy factor is, and that 5%. So then we're trailing down. So the last couple years, you can see that we've normalized back into the office at about that 5% level. And now, but look at 2019. We just collected this data and presented this at the UCSB, or we're guest authors for UCSB and also for the Central Coast Economic Forecast. But look at our manufacturing base, 1.9%. And 5% is normal. There's no room to put anything. A couple big wineries will fill up whatever's on the market. And given the fact that it may take a couple years to get a building built, 2-3 years, you guys get to kind of be the experts by looking at this chart of, are rents going to increase? Are they going to decrease? Hint, low vacancy factor, owners get to charge a little bit more. High vacancy factor, everybody's kind of fighting for rents. So hopefully that is just a glimpse of what we've had and going on here. And our future seems to be in this tech and medical expansion in San Luis. We are predominantly seeing that here. And that's very exciting for our community. So I hope this was informative to you.